ETFs are flooding the market with 700 million bulls, while miners are busy building a bottom with new highs in computing power. Will the market take off in the end, or will it shake people off? Ethereum tripled thanks to a story, gold continues to rise. Is Bitcoin just quietly bottoming out? Bankers, celebrities, and presidents all cut leaks. Is the meme carnival really coming to an end? With gold-backed stablecoins and state mining, will Kyrgyzstan become a chain power? Africa crypto 2050 billions of transactions. Was it really encryption that saved them, or was it the financial collapse that forced them to do so?
Thursday, September 11th, BitcoinTV Chinese channel. Where is the coin chain? I'm Michael/Dongdong. First, let's take a look at the 24-hour cryptocurrency market headlines. The Coinbase Premium Index finally turned positive, reaching 0.02. This indicates that US-based large investors and institutions are once again rushing to buy at high prices, which aligns with recent ETF inflows. Yesterday's funding data was also strong. The Bitcoin Spot ETF attracted $742 million in a single day, setting a new high. The Ethereum ETF also received $172 million, reversing the previous outflow. The underlying signal is clear. Amidst expectations of interest rate cuts and a warming policy environment, institutional investors are increasing their holdings again, preparing for medium to long-term positioning. The positive Coinbase Premium, coupled with significant net inflows into both Bitcoin and Ethereum ETFs, indicates that market confidence is recovering and the Q4 market may be supported by liquidity. However, we still have to be careful in the short term. The US August CPI will be released tonight. If the data exceeds expectations, Powell may be faced with the dilemma of whether to really cut interest rates, and the market may also shake first. Bitcoin's funding rate has recently remained in positive territory, most recently at approximately plus 0.0045. This indicates that bulls are still in control, with investors willing to pay to support short positions, creating an overall optimistic market sentiment. However, be aware that this trend hasn't been temporary. It has remained positive for over a month and is steadily rising. This often indicates that leverage positions are piling up, like a balloon inflating. If prices can no longer withstand this pressure, a sharp drop or a snap-up liquidation could occur at any time. And don't forget, major investors often take advantage of such opportunities to liquidate leverage positions. Overall, the short-term funding rate remains bullish, and the market still has upward momentum. However, astute investors should be mindful of this. While market optimism is one thing, don't let your leverage run wild. Overexertion can easily lead to a "the higher you fly, the harder you fall" scenario. Bitcoin's total network hash rate has broken another record, reaching 1.14 zettahashes per second. This is no small number, signifying that more and more miners and investors are desperately pouring money into the network. Higher hash rate ensures greater blockchain security and demonstrates continued confidence in Bitcoin's long-term value. Simply put, miners in the cryptocurrency world are synonymous with stable returns. They offer low risk yet significantly higher returns than traditional financial products. Miners are consistently increasing their holdings, a strong indicator that large investors are seeking long-term, stable returns. For smaller investors, regularly investing and hoarding coins is, in a sense, also a form of indirect mining. Higher hash rate strengthens Bitcoin's foundation, providing an invisible safety net for future market performance. In other words, miners are silently building a foundation for the market, while all you need to do is patiently hold onto your holdings. Please like and follow us for the latest developments in the cryptocurrency, blockchain, and mining communities within the past 24 hours. Click the bell to join our channel and become a member. You'll receive your membership code Monday through Friday. The latest PPI figures were a surprise. US wholesale prices fell by 0.1% in August, despite expectations of a 0.3% increase. Inflation is cooling faster than air conditioning. Trump immediately responded, "There's no inflation anymore. The Fed should cut interest rates." The cryptocurrency world was immediately ignited. Bitcoin soared to $114,000 and Ethereum soared past $4,400, bringing the total market capitalization to $3.94 trillion, a 1.83% increase. Even more dramatic, the altcoin season index soared to 63, a new high in over a year. Truly, Trump's roar sent the entire cryptocurrency world into a frenzy.
A QCP Capital report indicates that the gold to Bitcoin ratio is approaching the key resistance level of 0.041. Historically, this trend often indicates that gold still has room to rise, while Bitcoin tends to consolidate within its current range, preparing for subsequent gains. Meanwhile, Glassnode observes that Bitcoin is in a typical consolidation pattern, with the key resistance level at $114,100. A successful breakout could quickly open up upside potential, targeting the dense resistance zone at $118,000.
So I think that September 17th is an important catalyst. Crypto typically does really well in the fourth quarter, so I think Bitcoin can easily get to 200,000.
The market is a script that repeats itself over and over again. 2015, 2020, and 2022 all played out the same story. Bitcoin quietly bottomed out, only to see a surge in the next bull market. Now, a major reversal is likely brewing. The altcoin season is definitely coming, but forget the 2021 buy and earn frenzy. The market has always been a cycle of capital rotation and sector succession, and Ethereum is a textbook example. It hasn't undergone any significant qualitative change, but a significant liquidity gap has forced it to come up with a new narrative, resulting in a threefold increase in value due to the DAT concept. In other words, it has forcibly elevated narratives like stablecoins and RWAS into pillars. So, don't just look at the ups and downs of the candlestick charts. The key to the market is actually two words: liquidity plus narrative.
Kalsher Crypto Director John Wong released data showing that prediction market trading volume now accounts for 38% of all MEMEcoins on Solana. However, the number of unique MEMEcoin addresses has plummeted since its peak in December 2023, with activity now at less than 10%. Nearly 99% of newly issued MEMEcoins have been lost, and Solana's fee revenue has also dropped by over 90%.
Meme's recent fall from grace is hardly surprising. It's the product of a complex web of pitfalls. First, consider the broader market. Uncertainty abounds, investors are wary of rumors, and speculative capital is beginning to retreat. Furthermore, this market is largely unregulated, allowing market makers to reap profits whenever they please, while insider trading, even when rotting, remains unchallenged. Social media influencers and celebrities are even more adept at manipulating the market, each one a master of calling orders. They lead the charge, then fleece at a high position, cashing out faster than anyone else. Ironically, even national leaders employ this same tactic, demonstrating unparalleled skill in profiteering. The result? Projects are evading, scams are emerging, and liquidity is drying up. Even the most dedicated investors are struggling. The meme market is now like a dry well. Trust is gone, money is gone, and all that remains is air.
Kyrgyzstan has enacted legislation to establish national reserves. With double-digit inflation and bank failures, will Africa jump directly into full crypto?
Don't underestimate Kyrgyzstan. They've been making waves in the crypto world in recent years. In 2022, they enacted the Virtual Asset Law, which directly blocked unlicensed businesses and mandated licensing. In 2024, they took things a step further, proposing a crypto banking bill that would integrate blockchain technology into the existing banking system. This year, the president also legalized the digital som, with its official launch on New Year's Day 2027. Don't forget, they've also been experimenting with the stablecoin USDKG. This move was a global message. We're not just developing cryptocurrencies, we're also upgrading our financial system. Who says Central Asia is a crypto desert? They might be secretly building a crypto hit.
The Kyrgyz parliament passed the third reading of the amendment bill on virtual assets on Wednesday, formally codifying state crypto reserves and state mining into law. The bill, proposed by Minister of Economy and Commerce Bakit Sidikov, establishes a legal framework for the issuance and circulation of stablecoins, tokenized real-world assets, RWAs, and state-owned industries.
Country where cash is still king.
Okay, so cash only.
They've launched something revolutionary, a gold-backed stablecoin issued under government oversight.
Interestingly, Kyrgyzstan's envisioned national crypto reserve isn't simply a hoard of Bitcoin, but rather a national digital asset portfolio. According to the amendment, the reserve will be composed of a variety of virtual assets, sourced from mining output, the issuance of tokenized real-world assets, and direct acquisitions. The rules governing the formation, storage, management, and use of this reserve will be determined by the President of Kyrgyzstan, highlighting its highly strategic and centralized management approach.
Kyrgyzstan has recently made cryptocurrency trading a directive. Parliament passed the new regulations 3 times, requiring the state to not only maintain a national crypto reserve, but also engage in state mining, a clear move towards becoming the official mining boss. The proposal, proposed by Minister of Economy and Commerce Bakit Serdikov, encompasses everything from stablecoins to RWAs and even state-owned industry tokens. With the president deciding how to manage the reserve with a single word, the state has become a super scam harvester and a massive on-chain treasury. While other countries are still deliberating whether to adopt this approach, Kyrgyzstan has officially announced the launch of a national cryptocurrency hoarding model. Sub-Saharan Africa is like a financial black hole. Prices are soaring faster than kites, with inflation soaring into double digits in 1/3 of countries. Governments are swamped with debt, making borrowing incredibly difficult. Budget cuts are the only way to survive, while interest rates like a vampire drain resources for development. Worse still, many people lack bank accounts, leaving traditional finance on the brink of collapse. Local currencies are depreciating daily, and it's difficult to convert them into US dollars, making money feel like rubbish. Yet it's precisely this environment that has fueled the rise of cryptocurrency. It's become everyone's new lifeline. Spendable, transferable, and a hedge against inflation. It's practically more reliable than local currencies.
In markets where governments do not impose regulatory bans, right, such as the one in Nigeria, you typically tend to see the market flourish, grow more responsibly, develop more responsibly, and you see more interaction between the private sector and the public sector, right? And they need to stay ahead of the market. They can't afford to ban crypto players from operating or ban the financial institutions from banking cryptocurrency businesses. And I think that has done a lot to ensure stability in the crypto market.
A Chainalysis report shows that Sub-Saharan Africa is the 3rd fastest growing region in the world in terms of crypto adoption, with on-chain value reaching $205 billion between July 2024 and June 2025, a year-on-year increase of 52%. Stablecoins are a primary driver, with Nigerian institutions seeing $92.1 billion in stablecoin inflows over the past 12 months. South Africa, through regulation, has fostered a mature institutional market. Average user adoption is high, with small transfers of $10,000 or less accounting for over 8%, exceeding the global average of 6%.
The crypto scene in sub-Saharan Africa is booming with a certain pragmatism. Traditional finance in this region struggles, with bank accounts difficult to open and dollar exchange cumbersome. Consequently, people are turning to crypto to solve their problems. Stablecoins have become a lifesaver. They make remittances abroad fast and affordable, reduce the hassle of running a business, and offer inflation protection to ordinary citizens. This has rattled regulators, with South Africa quickly bringing crypto trading under regulation and Nigeria establishing a digital asset system. To put it bluntly, this continent isn't using crypto for speculation, it's using it for daily life. The next step will depend on how governments strike a balance between unleashing innovation and keeping a close eye on risks.
Ethereum POS has become a spring festival travel rush for staking. 2.65 million ETH wanting to exit the market face a 46-day wait. 780,000 ETH wanting to enter the market face a 13-day wait. Some complain about the slow pace, others about the crowded conditions. Everyone's just waiting for the green light. Solana, its market capitalization soared to $121.24 billion, ranking 185th globally. A public blockchain has forged its way into the dinner tables of traditional companies, a true example of the blockchain world entering Wall Street. Coinbase has confirmed that the bug that prevented some users from transferring coins has been fixed, and everything is now normal. Officials also stated that they will continue to monitor the system to ensure that there are no further issues. The Hong Kong Monetary Authority has issued new regulations. From January 2026, crypto assets must be managed in accordance with the Basel Capital Standards. Capital, disclosure, and risk exposure will all be reformed in accordance with international rules. Hong Kong's crypto regulation has officially been connected to the global grid. South Korean trader Nam Suk-hee has been on a tear on Binance lately, opening 64 altcoin long positions. His 7-day return skyrocketed 13,359%, adding $536,000 to his wallet.
Okay, that's the main content of today's program. Our channel focuses on valuable news in the cryptocurrency, blockchain, and mining circles, including news information and in-depth special reports. If you think our channel is valuable, you are welcome to forward and follow us. You can also become our member and receive the Member Wealth Code from Monday to Friday. Let's get rich together and add a zero to our assets in the bull market. See you tomorrow.